Let's talk. Let's talk. Good evening, folks. For those who cannot attend, this will be recorded for the purpose of the earnings season. Today is the great earnings day, the 30th of April. And I thought I'll get on. The earnings is so good. I honestly just want to sit back and watch Netflix tonight. But no, I have to come on. I have to come on and celebrate that awesome earnings season with everybody today. So before I go to the screen and see who's on and say hello, please give me 1 second and get my shared screen on. Okay, so hey, good evening, the usual crew. Brian, Sarge, how you doing? And Saurabh Mishra, how you doing? Welcome to your first live stream. It's the first time I see your name, so hello and welcome. And I hope you make yourself comfortable. And let's get cracking for the earnings. So there's 5 stocks I would like to speak about. I think there's 5 stocks that it's in the buy trigger database. We've got Meta, we've got Microsoft, we've got Robinhood, we've got Qualcomm and Caterpillar, all done well. Okay, so Meta is up about almost 5% after hours. Microsoft staggering 9%, beating everything. It's combination of the Trump tariff, recession-proof, great AI, and all the affordable capex that people are speaking about. It's not true. They're thriving, they're making money, and they're moving forward. Robinhood was down about 2%, and now they're up 2% because the CEO, Vlad, is speaking just now. If you've got Qualcomm, who's dropped 6%, and guess what? It's on the buy trigger range. So guys, I'm thinking, is it an opportunity? Let's talk about it in details. Let's get technical analysis. And then we got Caterpillar, which missed to both earnings per share and revenue, but let's talk about it. Okay, let's talk about it. But first, let's get to Meta. Okay, see how Meta has done well. And Meta has done pretty well. So I am quite proud because I did ask about what earnings people are excited about today, and a lot of people said Meta. So I think for me, Meta, if you guys have been on for a while, Meta has been one of those the best value for money. Max 7 under buy trigger, dropped from 700 all the way down to 520, 540, and I think it's an absolute bargain. The only thing I question the last few weeks, I'm sure Brian and Sarge will agree with me, is what is the basic mode? What is driving them? What's the way forward with TikTok stealing their market share previously? What's the future for them? So it's coming in. That Thread is doing well. I think there's about 350 million users. It's growing. I use Thread a lot now. I actually use Thread more than an X these days. X for information, but Thread for sharing. I enjoy Thread a lot more because it's more engagement. People are willing to learn on Thread more. So looking at this chart here, so I like this chart from Economy Insight. They speak about it pretty well. So daily active people plus 6%. The ad impression is going up. I believe some AI elements being used. It's focused target now to specific users. Revenue is up 16% year on year. 42 billion, 1 billion beat, man. 1 billion beat for a single quarter. And then you got operating margin. And this one, I believe the operating margin is going up. So I think it went up from 34 to 41%, and the EPS beat by 1.21, staggering, great. And CapEx, previously 60 to 65, but they're still spending 64 to 72 billion. They're focused. They believe the return on revenue is coming. So this is really pushing Meta on the upward trend. But if we go onto our buy trigger here, the buy trigger, without me changing it, using the existing data from 2024, 549 is the price when it closed. So buy trigger 568, valuation 966. So I think I did share that. You know what? When we bought under the buy trigger of 569, it was the bargain, the best risk reward return. I don't care, it's 525 that is under buy trigger is the best time to enter. And I hope the existing buy club members have been buying. And now we're hovering, and people think, oh, what if we reach 600, 700? Do we hold? I think Meta, with the current valuation and great earnings, 966 should be not far by the end of the year, if not in January or February. I hope if it goes really well, the dollar return on revenue, what they're spending, and Mark Zuckerberg is still spending, generating revenue, we could see some nice gains later on in the year. For me, an A+, one of 4 stocks that's A plus just now. A little test for you guys in chat. Tell me who are the other 3 A plus stock in the buy trigger, and I'll check later on. And 24% growth. I think this would change. If I update the data, I hope that the forecast change to push it 25. I like the wrong number. Recommendation 95, buy value, market expectation at 11%. No, that's what I mean. So if it's so undervalued, what the market is not buying this, they think that Meta is what at 11% growth. No, Meta is at 24% growth. So for those holding, it's still a good range. Great time to hold. Don't think about it. It's one, just buy and sleep and focus on other stuff in the house. Yeah, Meta, great one. Okay, Microsoft is another sleeper. Okay, Microsoft, for me, it's very rare for Microsoft to go under buy trigger. It's very rare for Microsoft to, why is it? It's very rare for Microsoft to drop 380. Very rare. From COVID and all, when I was doing my own personal buy trigger, it's very hard for me to say Microsoft is a great buy. So 380, valuation is a bit high. We're paying the premium value because of Microsoft. They have got high capex, they've got good dividends, they've got institution and pension buying, so it's hard to get them on like cheap. You have to pay the premium for Microsoft. Okay, 14% growth. A company that was at 8-9%, now it's 14% growth. AI, capex, high spending. So looking at the earnings with 9% uptrend to close to 427, which is, it's gone, huh? Risk reward buy to it, it's gone. The boat sailed. Don't even think about buying it tomorrow. Okay, it's gone. If you bought, you should have bought it last week. Look at Microsoft. It's a beautiful chart by QART Qatar. So Microsoft business productivity up 10%, intelligent cloud 21%, personal computing still up. Gaming is improving. I spoke about gaming. Gaming would be the thing that's coming back this year. They've got Xbox, they've got the libraries. It's growing. Margin is 45% higher than Facebook, and EPS plus 80% growth. So I don't need to go into the detail, but the enterprise, the SaaS, the cybersecurity, they're all growing. Things are growing. So if consumerism, if companies using enterprise system, are they slowing down? No, it seems that they're growing. People are using Copilot. It looks like Copilot, I think, we could strongly say that Copilot could be a success just now. LinkedIn is still growing. Dynamic products. So every avenue, it's looking pretty healthy for Microsoft. So those who own Microsoft as a very staple stock, when I say staple, up your pyramid is right at the bottom. That pays you, it's your slow grower, but it's the defensive base. Keep it, don't sell it. If you bought under the buy trigger, never ever sell it again. Okay, that's me for Microsoft. Great. If you hold both, even better. Keep a shout out in the chat box and tell me that you hold both. Okay, now over to Robinhood. Okay, Robinhood is one of the harder ones. It's been pumping. Robinhood has pumped 40% since its bottom. It was down at some point at 30. Now it's up at 45. It's been pumping 40% at some point because it's a favorite. It's like the people's champion. Vlad, the CEO, is like people's champion. People love him. You know, you can see loads of information on X. You know, some of them I think is just over the top. Okay, we focus about business. We're not here to create another Tesla fan base. We want to see real. So at the point in time, it was down 2%. Okay, now it's up again to 1.4%. Now it should be hitting the $50 mark. So for me, buy trigger range 38. So that's when the best time to buy, under 38. Okay, if you're buying way beyond that, the volatility is going to hit you. The 8% up and down every day will hit you. Buy 38, you're in the safe zone. Valuation, it could reach 64. But it's one of those, if it does reach 64 in a very short period of time, take some profit. Take some profit, move it elsewhere. 24% growth. So it's no difference from Meta. Meta is 24%. Hood is also 24% growth. Undervalued, but it's a high risk because it's a high risk stock. Looking at the earnings for Robinhood, we're talking about revenue growth. Okay, 50% year on year. So they're doing 50% more than what last year. Last year was about 400 million. Net income, net deposit is what we like about Robinhood. Robinhood is very proud of its people going to pension, people storing cash, because when Robinhood, a broker, can hold cash, liquidity into the account, a pension, it gives them flexibility on what they want to do, what they want to expand. Okay, and now they've got Robinhood Gold subscriber 3.2 million. Why Gold subscriber is important? It's because if you use Robinhood, you pay like very low or no fees or you pay the difference in what's the market offering and what they're offering, and it's really low fee, so high volume is required for Robinhood to make money. But then if you're a gold subscriber, you have to pay a fee. You have to pay a subscription fee, like Prime. So this is like the Amazon Prime for them. So as long as that gold subscriber goes, it helps them with the revenue. It helps them with the CapEx spending. And share buyback program increased from 5 to 1. Robinhood buying back shares, 1.5 billion. I just noticed that. Why are they doing that? Maybe they've got loads of cash holding the back. Maybe they bought loads of gold and now gold's gone up. And now they want to buy back. They should push the share price up to reward retail investors. That's pretty good. That's pretty good. But then again, this doesn't just tell me much. I think when Vlad speaks, he gives a lot of more alpha out there. He's a very people's person, and the more he speaks, the more the people love him. He's like the Elon Musk for finance. So for me, looking at just purely perspective on systematic investing, buy under 38, risk 64, trim it off a bit. Don't be too greedy. Don't hold more than 20% if you're under 35. If you're over 35, keep it at 10-15% range. It's not an easy stock to hold more than 20-30% of your portfolio, because it drops 10%, it comes back 10%. It's not healthy. It's not healthy. We need a balanced portfolio. We like growth, but we need a balanced portfolio. Okay, so 3 stocks down. Let me look at the chat group and see if anything that I would like to answer. Yes, we've been loading up Meta. Yes, come on, Sarge. I'm sure Brian is there smiling in the background. And good evening to you, Mike, as well. Nice to see you. And who else is on? And Nazak Noruddin. Hi, how are you doing? Nice to meet you. And salam, if you're from Malaysia. Apa khabar? Yep. Good to be here. Good to be here. And yeah, let's move on to 2 more stocks, Qualcomm and Caterpillar. The smaller of the group in here, Qualcomm has dropped. Okay, if you own Qualcomm, you'll be kicking yourself. But do not worry, because my 2 favorite go-to guys are speaking highly of Qualcomm. Okay, Qualcomm has dropped almost 6%. And with this drop, it's institutions selling. So don't buy quickly tomorrow if you're looking. Why? The buy trigger is at 149. So when it drops to 139, it's $10 below the buy trigger tomorrow. Valuation is slightly lower on Qualcomm because Qualcomm has got this. I think when I remembered when I doing the chat, the EPS was up, it went to negative, it went back up. So it's the V rebound on their revenue because of a sag during 22-23. It affects their revenue growth. That's why the growth is 4%. But my buy trigger should be more accurate to establish where the base should be. Qualcomm's earnings and narratives, especially if you look, this is Mr. Patrick Moorhead. So I've heard about, he says beat top bottom line, and they're still growing, they're doing well. Why is it dropping? It's dropping simply because they did not overly beat the quarter. So look at this one from Investing Visual here. Revenue 10.8 to 10.6. 2.85 to 2.82. So they didn't beat the market as much of a margin as people were expecting. They won that blockbuster beat. But Qualcomm expanding to networking, Qualcomm expanding to other avenues. They bought other partners coming up. So Qualcomm is not just about the Snapdragon with ARM. Qualcomm is now expanding, but it needs time for the CapEx invested in the last 6 months to capitalize itself. So give it time. This is what the experts are telling us. So if you're thinking of getting into Qualcomm, only if you don't have enough semi stocks. 2, if you are looking for more tech stocks. It's very hard. It's very hard for anybody to tell me, say, Alex, I don't own any semi stocks or I don't own any tech stocks. It's really hard. It's a very specific portfolio for those that, maybe you miss all that, the great semi runs and you're looking for like great value. So Qualcomm will be there, but it's very, very specific, tailored to your portfolio. So don't just jump in thinking that, it's cheap, let's go buy. No, you go in if it's specific, tailored, that you don't have tech, not enough semi, less than 20% of tech semi combined in your portfolio, then go for it. If you go more, then that don't get in. Okay, go for more services company, Microsoft, like the Meta, like the ServiceNow, like the CRM. Those are the ones to ride on just now. So if you want to buy the weakness on semi, it needs to be a specific portfolio. Okay, buy trigger 149. So if I go into the technical analysis of Qualcomm, it should bottom. No, that's not Qualcomm. That is Qualcomm here. Yes, Qualcomm will be breaking down to the 139 on this support. So it dropped literally from that support to this support there. But if the 3-day rule stands and the institution is selling such a rapid pace tomorrow, we should see hover around about nearer to this bottom again. I'm talking about the 1350, 133. So if you're thinking of buying Qualcomm, don't rush. I know it's a buy trigger, but don't rush. Give it a 3-day rule, okay? 3 days. So tomorrow will be Thursday, Friday. Look at about Friday or the Monday issue. Hover about 133. Then you buy in, then you hold and see if you can push higher, because this is a very, very strong bottom. Okay. So next, what we're going to look at next, the last one that we're going to look at is Caterpillar. Let me refresh to see if any change. So Caterpillar missed, the drop of 0.5%, and Caterpillar, I believe, it's just gone over my buy trigger recently. So buy trigger, if to remind myself, is 350. So if it dropped tomorrow, oh, it's still under buy trigger. It's still under buy trigger. But the only concern with Caterpillar just now is it missed its expected numbers for its revenue. So revenue 14.58 billion. We're talking about 14.29 billion. Okay, so if you look at this mess here of around about 250 million. So what's 250 million to Caterpillar in this quarter? Let me just simplify it for you, okay? 250 million for Caterpillar. We're talking about perhaps 10 of their turbine generators and about maybe 10 of their larger equipment. So they just missed 10 plus 10 of the equipment. You know, they produce about 300 to 400, 500, 600. Maybe they missed about 5 or 4 for that quarter. Maybe because clients did not place a PO fast enough, or maybe perhaps they couldn't source the line to build the equipment fast enough. So there are other avenues. So what I'm saying is, it doesn't mean that Caterpillar's orders are declining. No. It's something along the lines with the client, the customer placing the purchase order in time. It's all about, if they missed it now, they'll make it back in the next quarter. Because Caterpillar's manufacturing line is full year in, year out. They max it up to the max, and there's no way of trying to make even more. But there's no way that customers are rejecting the goods. There's no way that customers are saying, oh, we're going to buy less Caterpillar products, we're going to buy less solar turbine products. No, it's no way. It's just perhaps that quarter during Christmas or during the start of the year, something happened, but they will deliver the next quarter or the quarter after that, if you see where I'm coming from. So I wouldn't lose sleep on that. But as a stock, under 350 is great. Valuation 267. So the closer it gets to the valuation, even better. I have to place a premium on the buy trigger because, again, it's a stock that's owned by pension. It's a stock that's owned by dividend. It's a stock that's owned by institution. So you have to pay a premium, and now it seems that it's going below premium. Maybe perhaps institution is selling. So I think it's a great time. If you're looking for staple stocks, in your portfolio, if you're looking for something defensive, something industrial, something that's staple, then Caterpillar is the one that's right for you. Again, very, very portfolio centric. So you don't just go and just buy a stock. Okay, so if I go to the Caterpillar technical analysis here, okay, the support here 250, that's where the valuation trigger is. So it's going to hover. It's really near the bottom. You're not too far from the bottom. Okay, you're not too far from the bottom. And we'll see where we go. And I'm sure President Trump will be pushing their industries going forward. And with the ramp up of manufacturing in America, ramping up infrastructure, long-term Caterpillar should be good. That's why I'm confident give Caterpillar an A- on the buy trigger range. Okay. So that's it for the segment today. Any other chat? The only other surprise that's come up is, I believe, TSMC and Nvidia is pumping up about 2% each, based on the great earnings news as we see today. So this is it for me on the 5 stocks that we're looking at. Meta's down well, Microsoft's down well, Qualcomm, very specific centric to your portfolio. Caterpillar, very defensive, great. And what was that? Robinhood, if you own it, hang on. If you want to trim, if it's bloating up too much, is it giving you a bit of heart pain? If you have a strong stomach, hold it. You still got up to 68 to hold. Okay, so I hope that's useful. I hope that's useful for everybody to decide what to do next with your stock. So buying stocks is not just about buying what you like, but it's also tailoring to your portfolio, because everybody started at a different time. Everybody bought it at different buy trigger levels. I'm not saying my buy trigger, but your buy trigger levels. So depending on what portfolio you have, then you try to refine it to what suits your portfolio. Because at the end of the day, we're all here for a high growth portfolio. Okay. If you don't like high growth portfolio, we'll all be investing in index. But we want something high growth that can beat the index, that can beat the market, that can beat inflation. That is what the game is about with a family investment here. Okay, folks, thank you very much. I'm just going to say hello again. Nazak Doridin, thank you for typing. I hope that's useful. And yeah, if you guys have not checked out, do check out the calculator. I think I released, hang on, let me just get to the club. The club. You know, I am very, very excited every day trying to build more and more stuff. So I don't know if you guys realize there's a calculator. Okay, there's a calculator that I developed, but I put it on the website. But I don't think I've really spoke about how to use the calculator. But if you go to resource library, oops, let me share my screen first. Just before I end, I think this is useful for all you guys. I mean, it's not about just me showing, but it's me showing and educate folks how to use tools that's available. And since I can create them just now, I might as well share them. Resource library. If you go here under Clubhouse Resource Library, I've created a new post called Quick Stock Valuation Guide. If you click on here, and I've got a link up here. If you click on the link, okay, a step-by-step guide explaining where you can get stuff. But what is really important is it's a quick go-to calculator, Graham intrinsic calculator. I'm sure people do online, but I try to beautify it a bit, to make it a bit sexier. So here I go, bond yield, I always put 5.5, very conservative because bond yield is high just now. Let's say, let's give an example. I mean, let's say, I think Nvidia, oh man, I can't top of my head. Let's say a company stock EPS is 5, okay? 5 for the entire year of 2024. That's why I go for 2024. Look at the last year. They've got the data 20 is 5. And what's the growth rate? Growth rate could be 10, could be 15%, depending on the data you get. Okay, let's say 15%. How much is the stock worth? That stock is worth $154 per share. Just an approximate. It is not an exact, but it gives you an approximate to go in or out. Like, for example, somebody asked me about Spotify. I was very hesitant to put Spotify in because I knew that Spotify way overvalued. If you check, Spotify was $600 just now. People think that Spotify is Netflix. Spotify is not. Spotify is just a music app. Yes, it sells ads. Yes, lots of kids use them, but they give away too many free stuff. Spotify is about 5, and I think their range of growth is around about 15%. And it is 50%. And if you put it in, the valuation is about, no, it's not 15%. I think it was 6 or 7. I cannot remember. 15%. So I worked it out. It's about 184, 267 per share. And Spotify is like 600. So it's like almost 1/3. So I could put in quickly to check, to have a gauge where the wind direction is. And it's so far off, and it puts me off. So I thought, nah, I don't. But I have to create. Community asks for. I have to create. I have to showcase what buy trigger is. But if you guys are doing your homework, use Yahoo Finance, get the EPS, drop in the range, drop in like a quick calculation, quick measurement to see if you're far, is the stock price undervalued, over. That's the indicator. Once you get the indicator range, then you can go into detail of the technical analysis, the valuation, the fundamental. It's just a gauge, but it's a good enough gauge for you to measure how long the stick is. So hopefully you guys can check it out. It's free to use. So it's something that's to put in your back pocket to snuff up the BS if somebody tells you, oh, that's a cheap stock. Plonk it in here, see what the value comes out. There you go. And then if it's on buy trigger, then compare, because my buy trigger goes into a bit more extensive, into a bit more rigid details on DCF and all that growth. Okay, so I hope that helps with the last part, just to end it for everybody. And thank you very much, guys, for attending. There's 5 stocks, and if you guys are holding any of these stocks, congratulations. And any questions, even after this this live session, leave a comment below. I'll try my very best to answer everybody's queries. Okay, thank you very much. Thank you very much. Have a good day. I appreciate it, guys. Appreciate that. Okay, 24 minutes and now.